On the same note, we'd like to invite our first panel discussion members on stage to discuss reimagining digital payments. Please help me welcome Ahmed Atef from Visa, Mark Narouz from MDI, Islam Shawki from Paymob, Alaa Qushairy from AAIB, and our moderator, ElSalanekly from Ezdehar Management.
Hello. Hello, everyone. Thank you for joining us today on this lovely weather. I'll just start by giving a quick 5-minute breather for my fellow panelists to introduce themselves. Alaa, should we start? Quick intro.
Yes. Thank you, Amr. This is Alaa Qushairy. I am representing Arab African International Bank as head of digital innovation and the founder of AIB Digital Factory.
My name is Ahmed Atef. I'm part of the Visa team here in Egypt, responsible for fintechs and all non-banking financial institutions for North Africa, Levant, and Pakistan.
Hello, this is Mark Narouz. I'm heading the Beyond Banking function and leading the commercial team in Misr Digital Innovation. Simply, Misr Digital Innovation is the subsidiary of Bank Misr. We're building the digital-only bank, which is hopeful, inshallah, to be the first digital bank in Egypt.
Hello, everyone. It's great to be with you. I'm Islam Shawki. I'm one of the co-founders and CEO of Paymob. At Paymob, we build the infrastructure to enable businesses, accept digital transactions, and give them better access to financial services.
And finally, I'm with Ezdehar Management. Ezdehar Management is a private equity fund manager focused on Egypt with around $300 million of AUM geared towards investing in growth companies. So while the title of our panel is Reimagining Digital Payments, but before we reimagine them, can we maybe, given that you're all a panel of experts, discuss one or two trends that are shaping digital payments today and shaping the future of our financial transactions as we know them today?
Actually, how I see it from the perspective of the users, it goes without saying IPN and the hype of the IPN and what's happening in the market that is affecting each and every one of us. Yani, we as users are affected by what is happening through IPN. But the thing that from the players' perspectives, there is a new era where in the acquiring and the collection business, where and here I am referring to the facilitators and aggregators, same as Jidia and Paymob and maybe Favori. But yet, the trend, there is another dimension here, which is the trend setter, the user itself. If you can see, guys, if you remember, guys, I don't think that most of the people have witnessed this history, but 10 years ago, maybe more, when the first digital wallet was launched, before that time, the potential users of the digital wallet used to exchange their goods and services against airtime. And then they cash the airtime by selling it again to another end user or to another reseller. At that time, that was a use case. And then the digital wallet came to regulate this process. And then IPN came to bridge the gap between the bank account users and the digital wallet users to complement an ecosystem that covers all types of users in this system. And there is a new trend came, and it's happening right now, that the B2B service provided through IPN is used for collection by inside the shops. And you go to the shop, you pay through IPN. And this is not the right thing to be done. However, this is happening on ground. Even delivery representatives, they come and they accept money through IPN. And now this is being regulated. Currently, all shops will be equipped with IPN acceptance, and this is happening very soon. We're saying from 2 to 3 months, you will see that there are shops accepting payments through IPN. And this is the point that I need to highlight, that users are setting the trend. And then we regulate.
So to follow on the points highlighted here, definitely digital payments are undergoing a transformation here in Egypt. And if I am to highlight 2 key trends, first one, I would be talking about the mobile wallets. Very easy to use, convenient. You can integrate several use cases under it. Plus, the market itself helps with the penetration of smartphones. And you don't need actually to have a bank account to have a mobile wallet account. So all of this helps as well in the financial inclusion, and this would be the first trend. The second one is the embedded finance. Embedded finance, in short, is to embed financial services or products into non-financial platforms. Let's take the example of embedded payments like Uber, or embedded lending, such as BNPL, and now we're seeing a trendy emerging new use case like the SNPL, the Save Now, Pay Later in Europe. Those actually helps as well in driving the digital payments, and we do project that by 2030, globally, the percentage of digital payments happening over non-financial institutions or platforms will reach 74% of the total overall. So this would be the second trend to look for.
Thank you, gentlemen. Well, nothing more to complement. However, looking from a customer perspective, we are witnessing trendsetters currently. The domination of Gen Z and Gen Alpha into the upcoming nation, to the extent that we're calling them the netizens. They are setting the trend for the ecosystem, the financial ecosystem end-to-end, on how to deliver on their needs and their wants. What I see as trends basically in the payments ecosystem or the payment landscape, one of the very interesting use cases is the social payments. And I guess that social payments, which is basically embedding the payment into the social activity rather than being outside. And this is driven definitely by the demand of this Gen Z and Gen Alpha. They feel that they need to execute whatever they want in one single place with very little actions. And this is putting the challenge of simplicity on all the institutions and all the players in the ecosystem. This trend, and this is the upcoming trend that I see, and all the players, they need to collaborate as much as possible in order to catch up with this trend early on. Because Gen Z, as I said, and Gen Alpha, they are the trendsetters. And we have seen some key players in the Egyptian market when they focus on the essence of playing on the forefront or the top layer of introducing the services in terms of UI and UX, they reshape the market to the extent that we as financial institutions are looking at them and learning from the trends on how to focus on those two generations, the upcoming generations. Not definitely not to miss on the millennials. They are the digital nation. However, the trendsetters are Gen Z and Gen Alpha, and they are upcoming ones who will use the payments early on. We can see currently little kids, I would say from 10 years and moving forward, or actually less than 10 years, they demand to have a card. So just imagine when those guys or those kids reach the age of having a payroll with the trend setting that they are currently imposing on the personalization fronts, on the social payments, when they have the payroll on those banks, what will the banks need to give them in terms of capturing this interest, be it banks or whatever player in the ecosystem?
So definitely for us, when we were building Paymob, we had this discussion about what's going to change and what's not going to change. And the idea for a startup to be built, you need to focus on a couple of big trends and big shifts that are going within the country or the region that you're working at, and see what's not going to change for this exact trend to happen, and see how can you capitalize on it. So in our case as Paymob, what was going to change when we started almost 7 years ago is that we saw that there will be a lot of SMEs, or what we call small office, home office businesses that are going to be built, and they are going to take place digitally. This is obviously with the help of social media, with the help of website builders and this digitization that has been happening. So we realized that there will be a demand side from hundreds of thousands, maybe millions of those. And by a small office, home office, or an SME, it's not only like an e-commerce. A psychiatrist doing Zoom session and sending and taking payment on a payment link is, for us, a small office, home office. So the TAM is huge. So we said this is, our idea was that this is going to happen. So that's one thing that's happening. The second is that we realized that payment instruments is going to be extremely fragmented. So to add to my colleagues, they mentioned IPN, which is like InstaPay and instant payment, which just launched. There are wallets, there are buy now, pay later, consumer finance, added to the normal card payments. So we realized that there is a huge demand of, or number of merchants that are going or getting online. And on the other side, there are tens, and now at Paymob, we accept more than 40 modes of payments for to those SMEs. So we felt that if there is an entity or a company, and this is what we've built, to sit between and connect the dots between those tens of payment methods and democratize access to them for the hundreds of thousands of SMEs, this is what we actually built. And this was what we're betting on. And what we were betting that is going to stay constant is that, one, those SMEs, they want a cost-efficient way. They don't want a lot of hassle. They want very easy onboarding. They want to accept all these payment methods in the simplest way. They want their money as fast as possible because their working capital is very small. It's not like big corporates. They don't have credit lines from banks. So we said this is going to stay constant for decades to come. So again, this is what we've built to them. So it was mostly betting on what's going to change and what's not going to change, and how can you monetize this change that happened.
So the use of IPNs, mobile wallets, embedded financing, changing customer profiles, social payments, the entry of SMEs into the traditional customer base, right? All of these are big trends, right, that are also indicative that other players are entering a space long dominated by large financial conservative institutions, right? So you have the telecom players entering this, the new SME financiers that are competing, I'd say, with banks, right? The regulator even is playing a commercial role right now with the use of IPNs. So big trends. And maybe my question to Alaa and Mark in specific, with all of these trends, how do traditional banking institutions adapt to stay competitive with the influx of all these trends?
Okay, there are multiple things there are multiple of things that the banks has to consider. Technical things. When we are talking about technology investments in technology, it includes a lot of things. Includes a lot, not limited to AI, channels, data, automation, workflows. It's a lot of things. And there is this very, very important point when we are redesigning a complete enterprise architecture for an institution. We have to consider a business-driven design, which is not the case. I can state that this is not the case for most of the big-size banks. With all its complexity, it's not the case for sure. But this is the other thing. The third thing is rethinking new business models. Be it embracing some business model like the bank as a service. This is a model. Or engaging in a strategic collaborations with fintechs and startups in general for fostering the co-creation concept. Or even rethinking a new business paradigms. And here maybe I'm referring to investments in the startups and the fintechs with different forms. This is how I see it, how banks should prepare themselves for the next change.
Well, we're complementers, actually. We're not competitors. I know that we're building the first digital bank, or hopefully the first digital bank, so the essence might be addressed in a couple of points that we see very important. First point on how to address those trends, or how to, I'll ask the question for myself, why did IPN fly? IPN did fly because of the simplicity. Before IPN, in order to execute one single transfer, I know that this is based on a regulatory framework. You need to have at least 4 points of information in order to execute one single transfer. Now with IPN, it's one single information, which is basically can be a mobile number, which you have it on your phone and that's it. So I'll take this and put it in the essence of how banks need to do this, be it digital or traditional. It is the focus of simplicity. Financial products on its own, they are not simple products. From a customer perspective, this is what we have seen. They are not simple products. That's why banks need to focus on financial institutions need to focus on the simplicity aspect of building customer-centric products. This will lead to the essence of decommoditizing the product. Currently, banking product, it is said to be a commodity. However, how to decommoditize and add this extra incremental layer for customers to have the essence of simplicity. So first point is simplicity. The second point, which is very important also, it is, as Alaa said, it is the open ecosystem. Banks needs to embrace the fact of having a sort of an ecosystem collaborating with other players. We're not competing, be it PSPs, be it schemas, be it whoever in the market. We need to build this open ecosystem. It's a partners ecosystem that we can co-build together. Embracing this will add a very important edge to banks that they can go into innovation outside of their core environment. Because the core environment for banks, again, being firmly regulated, which is not a bad thing at all. We all trust banks and it has to be firmly regulated. However, to go outside this ecosystem or outside this core, you need to integrate. You need to collaborate with other players who have the edge and they are also regulated. So the 2 points is simplicity. The second point is focusing on building an open ecosystem with other players.
Thank you, Mark and Alaa. So maybe that we've addressed this, on the institutional side, maybe we can take it more to the consumer serve side, and this is where I hand off to Islam and Ahmed to maybe discuss some key challenges and opportunities for businesses and consumers alike in adopting new digital payment solutions and accepting new ones as well. I think you alluded to having 40 modes of payments right now being accepted, so I think that's huge.
So for me, the way I look at it is connected to the previous question, is that we are moving from like the end of one phase and going into the other. The phase of the last decade or more was all about enablement. So what the central bank has done is that they issued licenses to issue mobile wallets. We have Visa, we have prepaid cards. So now we have tens of millions of users that have a tool in their hands to make a transaction, regardless of the nature or the source of fund of it, whether it's a wallet or a card. I think what we're now moving into, which is the activation phase. So we enable people, they have the cards, they have the wallet. Activity is very low. So what will happen in this activation phase is that a lot of new companies, entrepreneurs, people who are thinking of certain industries that they're trying to digitize or they're trying to add value, this value add that you were mentioning, this is going to happen in collaboration between new, fast, and agile companies focusing on certain solution and obsessing about this solution to help to give this seamless experience for this certain industry. And this is coupled with the financial institution. Why? Because at the end of the day, you need the bank for the regulatory part, AML for the compliance. If you're doing lending, for instance, you need deposits. I mean, you need the supply of the funds that you're going to lend. And this is at the bank because you cannot take deposits. So it works in a collaborative way. I think the challenge is what happens is that when startups believe they can do what banks does, so they start getting into balance sheet stuff and they start lending and it goes out of hand. And the problem happens on the other side when banks sometimes think that they can just do what startups do. Yes, they can do it for one solution, for one product, but to digitize an economy, you need tens and hundreds of companies obsessing about certain kind of these small details. And I don't think one financial institution or even one startup can do it on their own.
So with regards to challenges and opportunities, I would start with the regulatory landscape. Regulations can be an opportunity or a challenge. An opportunity if you do have a solid one that encourages innovation, or if it's totally the opposite, it's a killer in a given market. And over the past years, we've seen the several initiatives that the central bank has been driving, reaching to a financial inclusion rate of 70%. That's almost 150% increase from 2016. So it's obvious that it is paying off. However, back to Islam's point, we need really to see how many of those are really active. Are they only getting the salary and withdrawing it in cash, or maybe buying saving certificates, and that's it? That's why they do have a bank account. Therefore, I do believe that with the long-awaited eKYC, having tokenization, plus the focus on expanding the merchant locations acceptance, especially on small merchants, this should definitely take us to the next level that we wish to be at. If I'm to tackle opportunities, I will talk about two sectors that I believe are overlooked. First one is the health sector. There is a lot of opportunities to digitize payments in that space. And the second one is the gaming sector. This is the largest entertainment sector globally. It's even bigger than Hollywood. So with your demographics of the market, having a median age of 24 years old, and the financial literacy across youth is almost reaching a 92-93%, you have all the capabilities to make this another successful use case in the market.
Thank you. So just in light of all these trends and the popularity of all these different payment methods, and my question is to all the panelists, how do you envision sort of the future of card-based payments, which has been the bedrock of our payment system for the past maybe 10, 20 years, and yet has not gained significant popularity? So do you think there's a room for leapfrogging sort of those card-based payments and into new modes of payments directly?
I like that I have this privilege. Okay, the thing that cards remains, however, for less use cases. This is how I see it. Maybe, yeah, this is how I see it. But the thing is, if you look at the scene in the near future, and you can, and I am talking about 1 year maximum, you have this IPN users, and you have the digital wallet, and now ATMs and push machines accepts both. You can use your IPN to go and withdraw cash from the ATM. You can use your IPN to pay for your payments through POS machines and soon e-commerce as well. So the scene will take another shape. Yet, as mentioned before, the trend setter is the user. So the next steps trend will be identified by the users. Yet cards still have their edge. There will be an on-ground competition. And I think it will be a very, very tough competition, capitalizing on the discounts and the offers given upon the usage. So this is how I see it.
So I'll comment on that. So I do agree definitely that cards might be driven towards specific use cases. However, cards comes in different form factors. It can be virtual, it can be digital, and it can be physical. So I do agree that the physical cards, they will not eventually die, but will be limited in utilization. However, with the smartphones, then tokenization comes into the game. Plus, you have the cross-border, anything that will happen outside of the market will still remain in need of an intermediary and a network to process all of these. So tokenization, I see this as the future of payments coming into Egypt, and based on previous lessons when contactless was issued, we actually didn't think it will fly as fast as it did. We had projected a certain number or target over a year. We achieved it in just less than a quarter. So this shows how Egyptian consumers are ready to adapt and adopt the new technologies.
I like the battle. It's definitely challenging, and the IPN case, which is conceptually the A2A, which is an account to account. So if this flies and this hand is given to fintechs to play with for account to account, this would be a game changer. However, back to what Ahmed said, I believe that what the CBE did when they issued the regulation of the tokenization. Tokenization basically is you'll be using your phone instead of tapping the card on the POS machine to pay. You'll tap your phone on the POS machine to pay. So no need for plastic cards. This will be a game changer. And I believe this will increase the adoption. And again, back to Ahmed's, I still believe that cards will remain for specific use cases. Tokenization will enable the growth of cards a bit more. And definitely the case of using cards overseas, this will remain as is, and it will keep on growing in the coming period.
So the way we look at it at Paymob is that you have the form factor, which definitely Ahmed and my fellow panelists were talking about, whether you pay using the plastic card or you add it to like the Apple Pay wallet and you pay using the wallet. So this is one change definitely that's going to happen and take place. However, there are different types of cards. So there are like the prepaid and debit cards versus the credit cards. I think what's happening with IPN is that paying at a source of fund, paying from your prepaid/debit card, definitely is going to be decreased significantly, and this is going to be taken place filled by like the InstaPay or the wallets that or apps that are making use of the account-to-account payment methods. However, I feel the credit card is very tough to beat because of the credit nature of it, and obviously banks, they give a lot of loyalty and miles and all of this, and this is what happened in India. So the Indian, if you want to look at a bit about the future of what's going to happen in Egypt, you need to look at the Indian market. So when they launched their UPI, which is the instant payment network. Obviously, prepaid cards and wallets were extremely affected. However, credit card managed to stay and actually grow because of the credit nature that any prepaid method cannot give you, because of the enhanced credit facility to make you buy more and the loyalty that comes with it.
Thank you, Sam. Actually, to borrow from your latest point, I think it's important to look at other markets also and adopt the use cases, right? And respond by offering products that match those use cases. And I see that most of the banks here have started, for instance, launching freelancer bank accounts that don't require certain documentation, just in response to that growing trend. So maybe my question to Mark and Alaa predominantly would be, can you highlight maybe a few innovative strategies, initiatives, products that your financial institutions are taking to be at the forefront of this wave of change that's happening in the financial sector?
Okay, well, we at Misr Digital Innovation, how do we see this? Because again, what we're thinking of is how to disrupt the landscape, and we have to do this. Introducing the first digital bank, hopefully, should disrupt the landscape. So what we see in terms of a strategy, okay, not a specific tactic or an initiative, is that banking is being shaped through a multi-layered approach. We can call it banking 1.0. This is the basic banking offering, saving and lending, where you have the core platforms offering you the saving and lending. And then through innovation came banking 2.0, which is offering the customer the simplicity through digital channels, the personal financial management, the omni-channel experience, and so on. And what is coming is banking 3.0. Banking 3.0 is basically focusing on the traffic, introducing customers beyond banking services on top of banking 1.0 and 2.0. And why are we doing this in terms of digital banking, and specifically for end-to-end digital bank? End-to-end digital banks, by essence, they will have millions and millions of customers. So they need to switch the business model from only focusing on banking into focusing on being banking as a platform, or platform banking. The platform banking, it focuses on building a sort of a marketplace, aside from the banking core services. You have millions of users with different needs and different wants. You have tons of data, okay? So introduce this layer, the banking 3.0, giving the customer the augmented layer or the value-added services that the customer can make use of, and thus switching the bank from just being a functional application where the customer logs in to do a specific functional banking transaction into an amiable application where the customer can log into the app and see different lifestyle embedded services, value-added services that they like. I'll give you two quick examples in order to get this more clear. Think of a gas station, okay? One gas station that is selling gas and that's it, and complementary gas services, and other gas station with a value-added services or an augmented layer with a convenience store, selling drinks, beverages, food, and so on, okay? Which one of them will recruit more traffic, more healthy traffic? Actually, the one with the convenience store. So people will go to this gas station to grab something to eat, and why not check the tires, check the gas, where fuel your car, and so on. So this is exactly what digital banks tend to do, and this is how we envision to enter the market. Not enter the market exactly, however, in order as a strategy to capture the essence of having millions and millions of customers moving from just core to banking 2.0 to the 3.0, the platform banking.
From my perspective, and coming from Arab International African Bank, I will talk about our strategy. By mid of 2022, we had our digital strategy, totally renovated strategy, digital strategy in place. And at that time, we evolved to decide, our aspirations evolved to decide on building a digital entity running an agile operations to cater for all internal development needs that is catering for the evolving and changing expectations of our clients. And this is done now. But what comes next is, and I'm talking about the short term, what we are currently doing, that we are expanding the operations of our digital factory to be able to involve more projects, introduce more products from our end, but also preparing the venue for hosting an ideation, maybe designing all what it takes for the co-creation with our potential partners. I mean, in local and international partners, be it vendors, be it fintechs, startups. This is our plan. The second thing that, and it will be announced very soon, that somewhere between Q3 and Q4 we'll be announcing our first Open Innovation Challenge, where there will be a problem statement that we hope that we get suitable solutions from the partners who will be participating in this Open Innovation Challenge. The third thing that somewhere next year, yani between Q2, Q3, we'll be launching our flagship innovation center that will provide the venue and the process for the co-creation with all its steps. And I hope this put us in a better place this year and next year, inshallah.
Now onto the disruptors. So basically, you guys mentioned, a couple of quick, responses to market demands, and basically, my question to both of you is how can digital payment platforms integrate or embed themselves with other, service providers to offer more, holistic solutions to industries and customers alike?
So I see Visa at the core center of this, because we call ourselves the network of networks, and there is a meaning behind that. It's about connecting all players together, whether by introduction to the right partners or by integrating technically. So we do have more than 300 APIs with value-added solutions. You get state-of-the-art products. So this is really our role. And our approach and model that we've built is to break down the life cycle of a fintech or any non-banking financial institution, even if it's a government, even if we go to the traditional, ultimately, we break down the life cycle of any product or any business. And we start tapping and introducing what is tailored and customized to each of this milestone into the life cycle. That is why I do believe that Visa support in that area is huge, and you always encourage players to come us at very early stage to really understand the value of what they can get.
So for us, definitely, growing, the most basic need for any merchant or any SME that we work with, mostly they don't care about digital payments. This is not what you wake up in the morning and as a business owner and think, oh, what is my digital payment strategy, or what is my digital payment capability? They want to make, the common across all of them is that they want to make more money. They want to make more profits or save expenses, because this is going to actually go back to their communities and their families. So if you aligned yourself with the common goal with the client, which is how can we grow their business, you will realize that you need to do a lot of things. So for us, you need to accept as many payment methods and sources of fund as you can. Well, let it be wallets, operator wallets, bank wallets, and all of those 40 different mode of payments. So for us to achieve this, we need to partner with 40 institutions in order to offer this. So partnership on the payment methods part is key. On the other side, there has been this article by Andreessen Horowitz saying that all startups, they are going to become fintechs. And to be honest, when we read this article, it was one of two things. Either what we're building has no merit because everybody's going to do it, or actually what we're building is extremely important because everyone is going to use it. So definitely we chose the latter, and we said, if you're a website builder, if you're Shopify, or if you're a company like Zamet who's doing like helping people build their own websites, if you are this company, instead of go to the regulatory and integrate with the 40 payment methods and do all of the investments we've done, how can we embed ourselves in your ecosystem so that you can monetize your clients from payments perspective? However, we're the ones building it for you. So I feel that partnership from this front has helped us grow substantially over the years, because not all the SMEs that we are working with, we actually went on and got it ourselves. A lot of them came in organically through our partners, whether let it be supply partners or demand partners. And to be honest, I think this is what helped us scale. So the discussion that we have with banks, a lot of people were telling me when we started the business, you will not reach scale because a lot of those small merchants, go focus on enterprise, because those small merchants will not actually make you process a lot of volumes. Last year, I want you to imagine that Paymob, on our merchant business alone, we processed 0.5% of the Egyptian GDP. So £1 of every 200 pound in goods and services that have been sold in this country passed through us. And this has been predominantly small and medium-sized enterprises or small office, home office businesses. So I feel through partnerships, you can reach those in a much faster way, and you can actually reach to scale much faster.
Thank you. You just answered my last question, I guess. I think my last question to all is how do you envision the partnerships and collaborations between fintech companies, established financial institutions, regulators, and enablers, accelerate the pace of innovation in digital payments in Egypt?
Okay. Actually, I see the answer is the co-creation. The co-creation will, let's say, cut the road to the end. Because what is usually happening is that when there is a product that is already ready, and then I go to the bank and whatever entity that I need in order to complement my offering and streamline my business, there is a disconnection here happening, that the product is already built, and now the bank is interested. I am as representing banks and traditional financial institutions. Most of the banks are super, super excited initially to partner with fintechs. Initially. It's a honeymoon. But upon the operations, honeymoon ends. If we unified the understanding of challenges, a lot of things will be solved. If we unified the understanding of the challenges, it will not be challenges. It will be the normal day-to-day to-do list for both of us as partners. And there is this fact that, this is my advice for fintechs and startups who are in the need for partnering with huge entities or banks. Since I am representing banks, you have to consider the fact that building your product, going through the ideation, the crafting, the designing, and then even all the technical efforts that you go through all these painful days to build the products is the easiest part in your journey. Honestly, this is the easiest part in your journey. Then comes the real part on ground, which is how are you going to streamline your business considering the regulations and considering the requirements of your partner, because your partners has to fulfill a lot of requirements internally and externally. So again, the common understanding of the challenges is very important, and this will not be done unless there is a co-creation happening from the very first beginning. This will pave the way for a better results at the end. This is from players' perspective, but from users' perspective as well, there is another dimension here, which is the purchasing power. If we are talking about a very smooth, 100% completed ecosystem of digital payments, yet where is the purchasing power? We cannot say that an ecosystem will fly by itself for the digital payments. We need to consider, and this is happening, the rise of all kind of digital finance that's happening, the ROSCA, the microfinance, the consumer finance, all these models. Maybe in the near future we'll have the EQIC. All this together will open the gates for the digital payments ecosystem. This is how I see it.
So I'll be very short, and I'll actually say that the answer of your question is within the question. It's about collaborating. So the question of whether financial institutions compete or partner with the fintech startups is way gone. Everyone knows that they need to work together. Fintechs do need banks. Banks do need fintechs. And this is how things are going to be going onward. As long as we do have the right regulations and removing obstacles for each others, the market is going to go towards the digital payments very fast.
Well, I'll not add much to what the gentleman has said, but from a digital bank perspective as Misr Digital Innovation, the equation of being disruptors and innovators, it actually resides on having an open ecosystem for everybody. And it's not just PSPs, schemas, and that's it. Again, the story, as I said, it starts from traffic because we have millions of users, and it ends into conversion. It does not start with a product. And to get this traffic, we need to have this sort of open mindset. That's why I reiterate again what Alaa said. It's the co-creation. It's not we're dashing the seller buyer relation, and we need to go into a co-creation relation, where it's not just a sort of a requirement that we send to a buyer in order to respond to the quotation and that's it. No, we need to work together, as the gentleman said, in co-creation labs. We need to think what is the problem, or what is the untapped opportunity that we can capture together. And again, as I said, it's an open bracket, not just for PSPs and schemas only. It's for whoever, for digital banks specifically.
So for us, I think it starts from having a clear strategy about what you do and what you don't do, so that before you start partnering with people, you need to identify what is the company doing and what we're going to partner at. So I think it starts with having the humility to just understand that we're not going to do this. We're not the best people to do this. And again, if we're true to our client, which in our case, the SME, we said we're good in tech, we're going to provide the digital payments part, but the financial services part, we're going to rely on financial institutions that understand how to do this, to partner with them. We've done this. We realized, or for us, we thought that if we want to go to reach scale that we've reached now, we cannot build like a big, massive island. We'll be building bridges that are connecting a lot of islands. However, our competitors, they decided that they want to go all on invest in every possible way, from loyalty to FMCG to e-com to payments, B2C, B2B. So we realized that people were trying to build these big islands. Definitely they succeeded in some and they were not as successful in others. However, we felt that having this clear focus on what we do and partnering with people who we felt that they're better than what we want to offer our merchants the best service, whether it's in underwriting for a loan, whether it's cost, because I mean, if we're not a deposit taking, we don't have a balance sheet. So for us to do take venture debt, it would be very expensive. Some of it is going to be in dollars. So at the end of the day, we're not going to provide the best thing to our SME or to our merchants. So I think it's mostly it comes from what you think you're going to do, where the value is, and how can you partner with others in a healthy and long-term way. Because, I mean, to Alaa's point, sometimes the partnerships, they start because, I mean, people just want to see how this goes, and then if it's successful, no, give it to me, I'm going to do it myself. So I feel it comes from, this is a long-term decision that I'm not going to do this. However, I'm going to let someone else take part of the upside of it. However, because they're adding value to me and they're adding value to my clients. However, I mean, this is something obviously we've seen all over the world, like Shopify with Stripe and all of this. We've seen between Apple and Samsung. So actually, Samsung is building some hardware for the iPhone and Apple in general. However, we're still yet to see those kind of partnerships. We're trying to actually foster long-term ones, but it takes a lot of trust in one another, and it takes time to prove that you're not doing this like for the honeymoon phase that Alaa was mentioning for a bit of time and then moving on to do what your partner's been doing. Thank you.
Thank you all. I'd like to take this opportunity to thank my fellow panelists for their valuable insights. Thank the AUC and Professor Ismail for this lovely opportunity.